Look at figures from the exchange to understand what is playing out today. The market is down, but let me join my colleague Effiong Ekop, who is live from the floor of the Exchange Limited to bring us up to speed with the trading pattern for today. Effiong, the market stays in red. How does this come to you?
Tolu, we see again low transactions at the exchange. It is the second day this week. Yesterday it was down. Today again, and 0.17%. Well, even the volume that we trade, very low, 280 million units of shares, valued just a little above 4 billion naira. And so you can say that fund managers are beginning to, reduce the volume of transactions that they handle each day. We've seen a bit of profit taking in the last 2 weeks, and I think the market is moving in the correctional way. Today, the low trades, the losses are being carried heavily by the banks. You talk about Access Bank, First Bank Group, then UBA, and you bring in some manufacturing companies. I cannot forget Dangote Sugar. Dangote Sugar is down. And then you have WAPCO Cement, a very big one. So the transactions, very low in many of the subsectors. Profit taking, we still say, is influencing the markets, and majority of the investors are holding up funds and then looking at the economy. You know, it is not so pleasing what we are getting from the larger economy, and it's affecting the market. The sentiment, the emotions, makes everything to be calm and low. Tolu?
So what are your expectations? Are we going to stay in red, or you think that this could change, possibly?
Looking at this and judging from what we had last week, I think that investors are not willing to push in so much money into the market for now. We've had a negative coming to the market. That's an indication from Labour that if for any reason the price of fuel gets higher than what we have currently, there will be a total shutdown of the economy. And that is negative to the market. And I think that it's not a good thing for markets to welcome. So investors may just be holding to see what may happen. And nobody prays for the price of that fuel to get beyond what we are having. Already we are feeling the brunt. And so the negatives are basically what we are carrying again. And on the trading floor, you don't see many of the professionals coming to trade. They prefer to do from their offices and then come on a particular day to clear up transactions. The economy is weak and we feel the negatives. I hope that somehow something will happen somewhere to ginger up our emotions.
Thank you so much, Effiong Ekop. Do enjoy the rest of your day. Let's take you outside our shows. Kenyan Lender Equities Group Holdings reported a 14% rise in the first half pre-tax profit to 35.2 billion Kenyan shillings. That's about $245 million US. Equities, which also operates in Uganda, Tanzania, Rwanda, South Sudan, and Democratic Republic of Congo, and said growth subsidies meant that almost half its balance sheet was now outside of Kenya. Equities Chief Executive Mr. James Wangi said net loans rose 26% to 817.2 billion Kenyan shillings in the first 6 months of 2023, while next interest income increased 17% to 46.4 billion Kenyan shillings. That's a total assets rose 23% to 1.6 trillion Kenyan shillings, while loan loss provisions net of recoveries were up 89% to 6.3 billion Kenyan shillings. In Kenya, where government has reinstated fuel subsidies in a major U-turn as it moved to cushion consumers from skyrocketing pump prices following the arrival of cheaper consignment last week that have spooked oil marketers. The energy regulator kept the prices of fuel unchanged in the latest review cycle after reintroducing the subsidies that would have seen pump prices cross the $1.39 mark. The Energy and Petroleum Regulatory Authority said in order to cushion consumers from the spike in pump prices as a consequence of increased landing costs, the government has opted to stabilize pump prices for August-September pricing cycle. The regulatory authority said oil marketing companies will be compensated from the Petroleum Development Fund.